All right, I want to talk a little bit about kind of game theory and how I use it and positioning myself into a position. I'm going to give you an example. Today is June 14th. Tomorrow is the 15th FOMC announcement. We've had a pretty nice sell-off here from 45.45 all the way down to 43.84. It was a new low today, and this is a 10-day chart. The 1 month chart here in the middle, we still haven't made a new low. The low a month ago, again before we took off, was 42.80. So we're trading right down here to the 42.85 area, which is where we took off on the European night 524. This whole move happened basically after hours overnight from midnight Pacific until the close and of the U.S. market. So we had a really quick move. We're coming back into a value on a 9-month chart, which is around that 43.28 area. However, if you're trading on a short-term 2-month chart, you start to see that we're getting really oversold. We've got an event happening tomorrow, and very likely a couple scenarios will play out. The first being we will bounce towards this upper value of 45.19 on a 1-month chart, or we will continue down to this 43.20 with possible move here down to 43.28, which again is bounce. So if you start thinking about it in that sense, how would I look at this from a trade management game theory perspective? Where would I put my entries? Where would I put my stops in the position? And really what I would do is I'd be looking to buy tomorrow right into the Fed announcement, right before the Fed announcement. Probably right, have a little bit, 4,400, 43.50, and then layered down to 43.25. So maybe 1, 2, 3 in size, and that basically is going to put me into a position where I'm buying the biggest piece near the bottom, which would be 43.28, and expecting us to rally back towards the 4,300 level. Now, if we get below 43.20 quickly, it's very likely that we're going to test that 42.80, and you would want to take a look at that number as far as reversing, say, somewhere below 43.20. If we held on a 30-minute chart. So this is one of the ways I like to do it, is where would I be wrong? Where I would be wrong basically at around 43.20. And again, we currently closed at 44.18 is where we're trading right now. Really, the whole essence of the exercise is I have a game plan. I know what I'm going to do at every price level. So before we get there in the day, I know where I want to be long and where I want to be short. Now, as the day comes in, things can change, but I really want to consider and look at where I'm going to behave and how I'm going to behave. So with that being said, that you've really got a game theory to me is where you're going to take your loss, where you're going to reverse and go the other way, where are you long and where are you short. Kind of have your scenario set up before you get into the market, and then behave accordingly based on the plan that you have. If the markets change and you're starting with a whole new scrapped number based on, again, a binary event that we have coming tomorrow, then you have to adjust on the fly. But it would be a significant number of things for me to have that change. So have a plan, understand where you're wrong, where you want to behave, where you want to trade, how you want to behave, and wait for the market to really come to you. This is the best way that I've found. It works consistently. Again, game theory, practice taking your losses and practice knowing what you're going to do at different price levels. That way, when it's there, you know exactly what you're doing. So pick out your spots, where you're buying, where you're selling, put your orders in even, and then trade. That's it.